Bring on board Mr. Rajnish Kumar, Chairman of State Bank of India, that's SBI. Mr. Kumar, good morning. Thank you for joining us. In the morning when we walked into trade, everyone was nervous about how State Bank of India stock would react. But I guess now logic and sense has prevailed. The stock has not gone down. But markets are disappointed and surprised that what prompted SBI to come up with such a large restate of numbers.
So, I think you have asked a very pertinent question, but as far as this quarter performance goes, there are two major reasons. One is that because of the yield movement in this quarter, we had to make a provision of 3,400 crores on our treasury book. The treasury income was also down during the quarter because of the yield movement. Second was the recognition of NPAs, the movement from stressed asset to the non-performing loan book, as well as consequent provisioning. So if you look at the quarter, yes, that was a disappointing quarter, but if you look at the overall secular trend and what is going to happen in financial year 19, so my view is that the analysts or the people who have interest in the stock, they are looking beyond the quarter, and I won't be surprised that the stock starts taking into account the scenario which will unfold in the next financial year.
And I think the 2% cut reflects that there is no panic in the stock. But I just want you to clear the air that after the merger of the subsidiaries, are your accounts now in line with the new RBI guidelines, or there is still some more audit left and you could come back with some more write-offs?
As far as March 17 supervisory review is concerned, so everything is aligned and recognized. And then we have now, if I talking about March 19, so I have 1 quarter in this year and 4 quarters next year. As far as NPLs are concerned, they cannot be evenly spread across 5 quarters. Recognition has to happen when the account becomes, as per rule, NPA. And similarly, provisioning will have to happen as and when the requirement as per the rules is. So in such circumstances, it is very, very difficult at this stage that we spread the NPA recognition part or the provisioning part uniformly over 5 quarters. That freedom I don't have, but I have given the estimate that in the financial year 19, our gross slippage ratio and the credit cost will remain at around 2%. That analysis and the statement which I made on Friday, I hold to that.
My next immediate follow-up question would be that because of this provisioning, will large part of the capital infusion which you got from government, will that be absorbed, and will now you be forced to come to the market to raise growth capital very soon?
No, the government 8,800 crore is all growth capital, because we are well above the capital adequacy ratio which is required, and that's why that 8,800 crore we are not using for providing the risk capital. That capital is fully available to fund the growth, and SBI being the leader in the banking industry in India, we are committed to support the revival of the economy, revival of the industry. Only thing is that as far as the underwriting standards are concerned, acceptability of credit is concerned, pricing is concerned, we are not going to deviate whatever our risk framework is and whatever our objective or target is for the risk as well as the pricing.
Right. Mr. Kumar, I must firstly point out that you've become a quasi stock market analyst yourself, talking about that people should be seeing value already in SBI as a stock. But aside of that, sir, want to touch upon your stressed assets, which currently stand at about 50,000 crore rupees, and exposure to RBI, IBC as well. Both the lists stand at about a total of 78,000 crore rupee and a total of 1.28 lakh crore rupees actually. I want to understand how much is the overlap between stressed assets and the RBI IBC list.
No, IBC list means you're talking about the cases referred to NCLT?
Yes.
No, as far as NCLT list is concerned, they all are under NPA. They are not in stressed assets. They all are NPLs, and our provision coverage ratio is 60% as far as NCLT list goes. And the provision which bank is holding, they are not way off the mark. We will have some more clarity by February end, because a few large accounts, the bidding is due today and within this month. So by February end, all the NCLT one, at least there will be complete clarity what is the provisioning requirement and how much provision bank is holding. But the initial signs in terms of some few large steel sector accounts are positive. And on an average, the cover of 60% for State Bank of India, it should prove in my estimate to be adequate. But if there is any small gap or this thing, so given the size of the earnings of the bank, it's not going to have a major impact. As far as stressed asset books is concerned of 50,000 crore, and so part of it of course is likely to become NPA. We still have a few stressed accounts in power sector, and that recognition wherever warranted will happen in the coming quarters. But the guidance or the estimate which I have given for financial year 19, that has been done after a very careful analysis of the corporate book. Retail book run rate, we know it is pretty steady. This year June was only an exception because of the merger. There is no volatility as far as the run rate for NPLs is concerned in the retail book. The corporate, as I said, that it cannot be uniform across the quarters, and that's why you see all this volatility in earnings. But even in the corporate book, because such a huge recognition has already happened, and all the NCLT cases where 78,000 crore is bank's exposure in NCLT 1 and NCLT 2, they will get resolved by September this year. So the result will be that both in terms of gross NPA percentage as well as net NPA percentage, the position will start improving in the year 2019. Major chunk of even NCLT 1 cases are expected to be resolved by April, even if the bidding process gets completed by February.
Mr. Kumar, appreciate you giving such an exhaustive answer on this one. Since you touched upon your retail book, I want to also understand, where do you see the retail loan growth book actually headed? If you could give us some color on that, maybe an exact number on a growth guidance that you may have set out as an internal target.
Retail book, we are doing very well as home loan is concerned. Market share of State Bank of India amongst all scheduled commercial bank is 32%. Same holds true for auto loans. Same holds true for express credit. So we have a fairly large market share, and this market share we will be able to maintain. Improving it further will be, I would say, tall order. So at whatever rate the industry grows, we will get over 33% market share in most of the retail segment. One segment where I am seeing a very good recovery is the MSME segment. Bank has done tremendous work in the last 18 months to increase the number of officers who handle SME account, the methods of lending, the underwriting process, the changes in the technology. So as a result, what has happened that even in this quarter, our growth in MSME has been very good. There are certain enablers now which are being created by the government and the Reserve Bank of India. So I firmly believe that the State Bank of India is in a very good position to take advantage of all these changes, and the focus will be on apart from the personal retail segment, focus will be on SME. Even in agriculture, if I take into account the impact of the money which came as a result of the loan waivers in the state of Maharashtra and Uttar Pradesh, our growth has been fairly good, and even in agriculture we are moving more and more towards what we call risk mitigated products, tie-ups, warehousing financing. So the whole business model is about de-risking to the extent possible and greater effort on increasing the retail book. Already we are at 60% of the domestic loan book, and effort will be that if we can further improve it by at least 200 basis point, that would be the strategy. On the corporate side, we are open to business. Any viable commercial proposal is welcome, but as far as the risk appetite of the bank is concerned, or underwriting standard is concerned, or the pricing of the credit is concerned, there will be no compromise on that.
So my next follow-up question would be a leaf from your last comment, which is that the underwriting standards will change, the risk which you've taken in the past will be different than what you'll take in the future. So can we expect that the corporate loan book growth will remain subdued and we could not see a very big uptick in next 2 or 3 quarters?
It will depend upon the demand side. As I said, that we are confident that the changes which we are making, they will provide a cushion against any future shock, and there will be a greater scrutiny definitely of any say for example project loan, which have been a major contributor to the performance of the bank what we see today, and greater equity from the promoters, the quality of the promoters, the approvals whether they are in place. So many things we have put in place, and the risk-based pricing we have brought in, risk-based budgeting right up to the branch level. So there are a couple of things which have been done in the bank, and the growth for the sake of the growth or chasing the top line, that is not my priority or bank's priority as of now.
So when do you think double-digit growth on the lending side, corporate lending side, will come back purely demand fueled?
Yes, it will be demand driven, and on the supply side, as I said, there is no constraint whatsoever from the bank side, but anyone who wish to borrow from State Bank of India, it has to be on the basis of what risks we do perceive and what is our reward expectation. So that much again and again it is a repetition, but what I am saying is that being open to business does not mean that any cost, business at any cost.
Now I would just 1 or 2 closing comments from you. We've extended our appointment with you. You've guided for a ROA of about 0.6% and 1% in FY19. That's a very aggressive kind of an comment, which means that you are betting on significant uptick in your return ratios in next 12 to 18 months.
Yes, very much. So our estimate or target is 0.60 ROA by FY19 and 1% minimum by FY20, and given the estimate of the gross slippage ratio and the credit costs and the quarterly earnings or the annual earnings estimate, it is not a target which is I would consider impossible or very ambitious to achieve, but 10% variation here or there, that is always possible.
And apart from SBI Life, are there any plans to list any of your other subsidiaries in next 12 to 18 months? Because financial markets are hot right now, whether it's a mutual fund business or a credit card business. Are you looking at monetizing anything else?
Yes, that will be on the agenda, but not in next 12 months, nothing in financial year 19, because I believe that the subsidiaries in next 12 months, they will be able to add considerable value. SBI General has started earning profits, mutual fund is doing exceedingly well as our SBI cards has started doing exceeding well, and now fully leveraging the distribution strength of State Bank of India. So will add more value in the next 12 to 15 months, and then they will be ready for listing. So maybe in financial year 20, we at least these three will be ready for listing.
FY19, is Rajnish Kumar cautious, excited or optimistic?
All the three.
Come
if
on.
you are a banker, you have always to be conservative and cautious. And if you are in business, of commercial lending, you can never be pessimistic.
So what is the realistic side then?
Realistic?
What is the realistic view? I mean,
What is that? Can you repeat your question, please?
What is the realistic view of the economy?
Whatever I am talking about is all about realism. There is nothing which is not real.
Okay. Well, appreciate your time. We deeply appreciate a frank chat with you, and the fact that you beautifully outlined, what has transpired for the quarter gone by and where you think things would move for SBI and for the economy for the coming years. Well, the stock's not fallen, and the stock is taking leaf from, I guess, the fact that the management commentary on assets, return ratios and ROA, return on assets, is quite optimistic. So markets always focus for rate of change, and the turn in the economy is real, and I think that is really telling some outsiders to take optimistic view. With these kind of numbers in a bear market, the stock would have collapsed. But 290 off from the day's low, which is helping the bank nifty as well. That's it on this extended show of trading calls. I'm Nikunj, signing off from Mumbai, and Aisha from actually I'm signing off from Delhi and Aisha from Mumbai.
गुरदीप के खेतों से पूनम के टी एस्टेट तक बैंकिंग चले बस एक नंबर पे।